Hey, what's up guys? Welcome to this short overview of the S&P 500 and the big crash that's gonna happen.
43%.
What in the world is happening on Wall Street?
Two-year note yields went from 190 to 166 in the blink of an eye.
On the NASDAQ, everything and more has been completely wiped out.
It was the worst day on Wall Street since the crash of 1987.
This is my analysis for the future and why we are heading into a very big crash, the biggest crash we have seen so far in the S&P 500 and in the economy in general. This upcoming crash will look so bad that the 2008 crash, the last one, looks easy and good, just like a little correction, because this one is gonna big. I am personally, with the analysis I'm gonna show you, I forecast a 48 to 50% drop in a short amount of time, and we already activated into the direction of a 48% drop in the S&P 500. So we're just gonna switch over to the chart over here, and what you see here is essentially the S&P 500 and the small marks that we have over here. So this one is a drop in the years of 1974 with a 49% correction. Then we have the next one around 82 with another 37, then we have another one with 34, then we have another one with 48. So this one was a pretty big one. This was the crash of the 2000s until 2003, where the S&P 500 corrected. And then we have the most famous one, obviously the latest, or not the latest one, we have a little one in COVID that we're especially going to talk about, but we have one here, which is the 2008 crisis, where we had a correction of over 54% in total. So what I want to do with you guys is obviously go over the chart here and just explain you and analyze where this is going and what's going to happen in the future. So the last and the recent one was obviously the COVID correction over here, where we had a correction at the top until the bottom of 35%. So 35% is pretty moderate compared to the last ones in before 2000 years, and then obviously in 2000 and 2000 and 2008, a big crash with 54%. This marks the biggest crash so far in correction with 54%. It started at the top in October 2007. The end was in 2009 Jan, and from there on we saw a big rally in the S&P 500 with no notable corrections, basically until COVID times of 418% in total, and then another from the correction of the crash to the top of the S&P 500, the all-time high, right, with another 118%. So starting from 2008, the lowest point in the crisis, up to the all-time high so far is over 500%, which is insane, right? So we're just gonna clear out the whole chart here, and we're gonna go over it together. So just give me one little second, and I'm gonna clean this mess up a little bit, and we're gonna go deep into the analysis. We're gonna use the SK system, which I use to analyze every market. I've been a student of the SK system since many years now, and I use it to analyze every market. It is proven to be very precise in entry points and where the market is gonna end, or basically where the market is gonna go in general. Okay, so what we did over here, we zoom in a little bit. What we did over here is we took the whole correction level, which is essentially the low point. Okay, we'll just do it together. So we have the Fibonacci with the lowest point, or the starting, right, up to the all-time high, which shows us the correction level in between 50% and 66.7%. These are Fibonacci numbers, and they indicate our buying zone. Okay, so what is going to happen is obviously we have the push up. It's going to correct to somewhere over here before we start to go up. What can happen is obviously it can overcorrect somewhere to the 786%, which happens a lot of times, but we most likely are going to look for a re-entry in the S&P 500 over here, where we have the the all-time low depression, where the crisis is very big at the end of the day, up to the point where we are going back up, which is marked over here. Okay, so that's what happens all the time. I'm going to give you some examples to prove that the system is very precise. For that, I will just take off the stuff here one more time, and we will go over it together, right? So we have at the end of the day, and I show you with it the last corrections, okay, and then I'll show you what I mean and how precise the correction is happening or happened in the past, essentially, right? So we go to the all-time high over here, all-time low that we used, right? And then what we see over here, the last all-time high and precisely you see that like perfectly, like insane, okay, how it reacted on the 50% mark, and one more time after that again. So as you can see, and this is the S&P 500, guys, this is not like a small little chart. This is like the economy, the world economy, basically the American economy, which dictates the rest of the world. But what you essentially see here is that the SK system, okay, from the low of the move up to the highest point back then in 2000, okay, had a correction perfectly to the 50%. Okay, yes, we had a little bit of drawdown if you would have entered in a position. Let me zoom into it a little bit so you can see it, right? So essentially we have this big drop over here, which is in total 50%. So it perfectly went into the 50%. We had a little bit of a drawdown if you would have opened any positions of 1.67%. If you would have opened this position to a point where you at least hit all-time high again, you would have made 98% in a period of entry until top of this is October 2000, 2007. This is it 2000? Yeah, so starting in October 2000 until all-time high, which we had in 7, okay, this is essentially 5 years, okay, with a stock portfolio or as an S&P 500 ETF or position. This would have been a good amount of profit, obviously, then also with the leverage, if you use leverage or anything else. So if you want to find out more inside of our community, the TPR community, you learn the SK system, you learn how to analyze the markets, all of them, you learn how to invest, risk management, money management, everything that is important. But that's not it. We travel together all around the world. We have a community of 5,000 people that is spread around the world. You can join the community events, the trainings, the trading events, whatever you want. We have not only the education, not only the mentorship, not only the community, and not only the right information in terms of mindset, but also information when it comes to the markets, whole fixed system that you can join with a red line, that you can start from 0 to pro with us in the TPR. Now I'll give you another random example. Let's just go to another crash. I don't know which one, it doesn't really matter, because most likely the system was accurate anyways, okay? So I'll just clean it up a little bit, and again we go to the all-time low, okay, of the movement, which is basically 0, right? So this is like 8 points, so it doesn't really matter. And here again is what I'm saying, from the all-time low until the correction, right? We had another reaction in the so-called BC correction. So this is our buying zone. This time we would have had a drawdown of 8.5% if you would have opened the position, and a profit to all-time high, obviously, from entering the position until all-time high is hit again of 86%. So same thing. So you see that there's patterns. So with this said, you can continue to do this. The settings for the Fibonacci is this one with 50% correction, 55.9, 618, 66.7. This is our so-called buying or selling zone from the all-time low to the all-time high. So the whole movement, right? So let's go back and analyze the current. So what is gonna happen, and what is gonna happen doesn't really look good. So what we're gonna do together is we're gonna use the SK system to analyze entry points and the market and where it's going. For this, I'm just gonna delete the current stuff so you guys can really see how we do this and how we go about it. So what we have here is the S&P 500 in the current market. So let's just go out a little bit, mark our all-time high. So this one is our all-time high, okay? And what happened so far since the all-time high is that we are seeing that we have a downtrend. How do we analyze a downtrend? Basically, if you want to use a trend line, this would be a downtrend. We have lower lows, okay? And the highs are also lower. So this high compared to this high, so this high here, so high number 2 compared to number 1 is lower, and high number 3 compared to 2 and 1 is lower. That's an activated downtrend, which confirms that we are currently going lower in price from time to time in the S&P 500, right? So what we're gonna do here together is we're gonna go back so far from all-time high until the lowest point. We already dropped 10%, and fair to say, as I said, we're already entering recession because we are in a downtrend, and you can see that when it comes to inflation all over Europe, especially in Europe, in the USA. I mean, I travel these countries frequently from month to month to year, and I've seen big price increases, especially when I go in LA, and I buy a coffee. If I go to Dubai and I go in a restaurant, I go Germany and I gas up the car. The inflation is real. It is already hitting. We're already in a recession, okay? So how do we analyze where the market could go? So number one is, again, we take the whole movement of the S&P 500 from lowest point two highest points, which is this one, already marked it, right? So we start at 0, okay, we're gonna put it in manually so the coordinates are real, okay? So this one is at 8.7, we put it on 0, so price 0 until all-time high, okay? And our correction level is, again, in between 50%, correct? In between 50% and 66.7%, which you can see here. I just have to line this up a little bit. So this one would be our buying zone, essentially, okay? So what I'm gonna do is for you to, if you're following this, I'll just gonna type it in. So this is our buying zone, okay? That's where price is gonna head. Now, obviously, this is a very big range, and we want to have a more defined range. For that, we're gonna look for bearish sequences. So markets move in sequences that look like this, or look like this. Oh, sorry. That look like, give me a second. That look like essentially like this one, okay? So low, correction, and then activation. Activated is when it drops below or higher the last price, okay? So what we're gonna do again is we're gonna go over the S&P 500 and analyze the bearish movement that we are currently having, that we just talked about, or that we are currently in, to find out where's the S&P 500 going. Are we already in an activated bearish sequence? So are we already speaking about a recession, which I said in a downtrend? Yes, the trend confirms that, but let's confirm it with more technical analysis and see. So what we're gonna do is the same here. You see a movement, which is essentially this first one, right? So you have the first bearish one. How do we check it out? We do the highest point, we go to the first correction, and again you have a reaction in our selling point, which is not a beautiful reaction because we overreacted a little bit, but it doesn't matter, it's still valid, and even it activated the sequence. Again, an activation of a sequence if its price drops below or above A. This is A, so we dropped under it, means we are currently in an activated sequence. Now again, we will use Fibonacci to define our goal. So where's the price going, right? So we go from 0 to A to B, which is essentially the correction over here, which is, let me see, this one. Okay, I made a little mistake. This is the first correction. Okay, so let's check it one more time. So I'll just zoom in a little bit so it's easier for us to understand. Especially here, I have to speak at the same time, explain you guys. Okay, so again, we start at the highest point, we go to the first correction, perfect. So now the first correction is perfectly in line, okay? And what happens afterwards is that we use the Fibonacci, the extended Fibonacci, to define the goal. Where is the price going? First correction, first move to correction. And the first is 1.618. So we define our goals where the price is going in between 1.618 and 200%. So that's the price corrected 200%. So made essentially 200% from its beginning. Okay. Now, as you see, again, perfectly, price went into our C, which is our goal zone. Okay. So that's where price with a high probability will go, and it did. Now from that, it bounced back. So what we're going to do is we're going to use the whole correction level, which is basically the whole move. Okay, so we have the whole move, and again what you can see is, so this is all-time high, so what you can see again, price went into our correction zone beautifully, had a wonderful reaction. Okay, many times it also, so it reacted. Okay, again, we have to take this move first, right? So this one would be the first correction with perfectly reacted. We had a perfect reaction in the selling zone. So this one turns into a selling zone. Why? Because Because we are currently in a bearish momentum. We are in a downtrend, right? So perfect sequence, beautifully finished. And then we have another re-entry. So price dropped lower. Okay, so we have to adjust the Fibonacci's. Price dropped lower, and again a beautiful correction. And that's where we are currently. Okay, so we have another beautiful correction. Especially if you would have entered a trade here, you would have had a drawdown of 0.93%, so 1%, and you would have been in profit in the lowest point at 8%, currently at 4%. Okay, that's actually how trading works, just for you to know. But we are not trading right now. We are focusing on the S&P 500 and analyzing where the price is going. Now, what do we do? To continue to see where price is going, we just do the same thing. Now, this time we just do it bigger. We take the whole move. With the Fibonacci extended, we go from here to the lowest point to the first correction level, and I will just change the color of the sequence to make it more simple for you. So we have another sequence. This is the secondary. Now it's the primary because it's bigger, because this one is this. Wait, I'll just change the color. So our black one is our first sequence, which is perfectly finished and activated. So we have a bearish momentum market activated. Now the second sequence, which is the secondary one, will indicate the future moves. And if we go into the future moves, you see something that is really, really astonishing, and at the same time, yeah, it is kind of scary, right? Because you see the probability and the high outcome, or basically the high percentage of how accurate the SK system is. So my prediction, there it comes. My prediction is that we will drop from this point on forward. Okay, from this point going on forward, we have most likely to the first 50% a drop of 39%. I recommend, or not recommend, but I think, okay, I don't want to recommend it, but normally we should see, because we have an we have a colliding zone, which is basically the goal target of the sequence, plus we have a buying zone over here. So a colliding zone is basically this line where both of the lines are, we are in the buying zone, but also we are in the target zone of the whole sequence, which is somewhere over here, which would represent the price of, and I will just mark it and do it put it a little bigger so we see it. So let's use like a bigger line, a fat line. Let's do it yellow. Okay, so price is probably going to go to 2049. This would be again a correction of 49%. We already had a correction from all-time high of 21%, marking a whole correction from all-time high until our next correction. So a crash of 57%, which would make this one of the largest crashes in history of the S&P 500 in our economy, which obviously is going to have a big effect. So from now on, we are most likely gonna have a free fall of about 40%. Obviously, price will not only just fall like this, it can, but most likely like a flash crash. But I believe that we're gonna have some corrections over here, and then we're gonna see a flash crash. And buying zones, because that's how the market works, you sell when everyone is happy. So you should have sold your assets, whatever your investments that you maybe have bought here or in the last COVID crash, which I did. So if you would have if you took the whole COVID thing, okay, 2020 until now, you would have made 180%. So this is where you bought crypto. This is where you bought your assets. That's where you bought houses. That's where you bought watches. That's where you bought whatever, right? And right now, if you want to capitalize on it, even the real estate market now is a good price to sell and then rebuy if we are in between 2400 and 1600, because that's where we're heading with, again, a high flash crash, or basically a very high crash, and flash crash means the price drops hard, which it probably will, as we saw it in the COVID times before, which are basically in COVID, which you see over here. So we had from the all-time high until the bottom, we had a flash crash in a couple of days of 35%. So it will do some corrections like it's doing here, and then it will drop. And I will show you that a little bit more in detail in 1 second. For that, I'm just going to clean up the chart again, and then I'll show you what I mean, because this is more than interesting. So let me just clean this chart up a little bit. So just look, and that's a very important thing when you do technical analysis, is see what happened in the past, because history repeats itself. Now take a very close look on the S&P 500. Just take a close look. Okay, what is like the move? What is it doing? So we have we have a low. So we have the all-time high, right, with a push essentially. Then we have a low correction, low correction, low correction, low correction, low correction, and then it goes up a little bit into our, selling zone, as we just saw it before it does this. Okay. Now what we're gonna do, and I love that about TradingView, is that you can just copy the pattern. So I will just copy it. Okay. So we'll just click on clone. Okay. Now we can take the same one. Oh, I didn't have the whole thing, but it doesn't matter. So we just take the same one and we look what happened in the past. We just check what happened in the past. So COVID obviously was a so-called flash crash. It just like dropped instantly, right? Very ugly, because it's very difficult to determine. But let's go back a little bit into the past. So we have, you see, we have something similar here. Okay, so you have something similar here. If you zoom in a little bit more, because obviously it's less price movement, but we essentially have pretty much the same thing. So the pattern is always the same, right? Bum, 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 bum. High, this would be the correction thing. And then, this would be the whole correction thing. And then, bum, the crash. So essentially, this part over here, which here was 80%, is what we're going to see here, right? I'm not saying that the price here currently is just gonna drop, right? We are seeing this correction here, the more like the sideways movement, the consolidation zone, how we call it in trading. I don't want to confuse you a lot with these terms, but it's going sideways, and then it's where it drops, right? So you see that in the past. So history repeats itself. It's always the same, and it's always gonna stay the same, right? Market is the market, the price is the price. It is supply and demand, and it's gonna stay like that. Okay, let's go back to 2018. We had a little correction over here. Let's go to the bigger one, the 2008, because I feel the 2008 one is pretty similar to the current one. Just like obviously we're gonna have a little bit of a bigger one in terms of corrections and crash. As I said, the highest that we ever had. For that, we have to go back to this one. Now see the market, see how price action, how price is moving. Okay, so we have up, correction down, and that's where a bigger move comes that we have saw. That's the correction. Okay, and again, I don't even have to do it. Already know. Bum, perfectly into our selling zone again. So you see again, the system is proving itself, and from there on it starts. From there on it starts where we obviously see a very big crash from the correction level until here. So that's what you're gonna see in the future S&P 500, which again, in total, to come back to the conclusion, will mark a total drop of over 50%, marking the largest drop that we have ever seen in history. And from there on, it will be pretty interesting because we're gonna repeat the game as the game repeats always, and it's always the same. We buy when there's blood on the street, and we will see a lot of blood on the streets when this final crazy drop is gonna come. And what we're gonna do when this happens is we're gonna buy again, position ourselves, have money now, and take the ride up. But there's only one thing that we have to be careful about, and that is the future of cryptocurrencies and how they're gonna take over, because probably this is gonna be one of the last crashes that we're gonna see in our monetary system, because I believe that the government, the society, the elites are using this big crash to reinvent the monetary system and bind it more to accountable systems such as, you know, CDBCs, or how you call them, the future currencies, the digital future currencies, where the banking is completely centralized, even more than nowadays, where they have full control because everything is digital and there will be no cash anymore. So they have you under control 100%. So this is probably what's going to happen, but that's how the markets move. They want you to invest here and lose everything on the ride down. And that's where the big elites and the big wealthy and knowledgeable traders such as we buy, reinvest, and we take the up again. I did the same thing on crypto, and that's what it is, guys. So that's my future analysis. Mark my words and give me a little bit of credit if it happens, right? Because I've never gotten credit for that. And I've analyzed a lot of stuff, and Bitcoin, I told everyone to sell, and it dropped a week later, 50%. I never got credit for it. So this marks the recording that this system and what I say and the knowledge is true, and you can analyze the markets. And obviously I'm flexing a little bit, but that's it.